Do you think that the hedge fund before releasing DeepSeek shorted NVIDIA stock?
I love that question.
Yeah,
Definitely.
Maybe,
I
yeah,
think that's
maybe
that's
they did.
that's the definition of insider trading. So I highly doubt that.
Hi, everyone, and welcome to the 23rd episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our great guests for today: Ahmed Al-Thukair, GP at Stealth Mode Deeptech Saudi Fund; Ali Zewail, venture partner at Endure Capital; and Hadi Halabi, co-founder and CEO of Stryde. And as always, from FWDstart, my co-host Jamie Lane. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their company's website. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Welcome to the show for the first time, Ahmed and Hadi, and welcome back, Ali.
Thank you.
Thanks, Ahmed. It's good to be here.
In this episode, we will talk about a new growth fund for MENA startups, a biotech company in MENA, a Proptech company from Dubai expanding to Saudi, and of course, the big elephant in the room, or I could say the big whale, DeepSeek. Let's kick it off with the first story. What news did you bring us this week, Jamie?
Yeah, let's kick off with, I guess, a recurring problem which we've discussed over the course of the last 23 episodes. It's mad I've done 23 episodes in actuality. But look, let's chat about 500 Global, their new early stage growth fund, which is great news in reality. So it's going to be led by Amjad Ahmad, supported on the investment committee by Courtney Powell. So it's going to support startups beyond the seed stage, providing up to $10 million per check for Series A and later stage startups across the region. In terms of backing, you see the usual suspects: Jada Funda Funds, PIF, SVC. Is going to be supported by Sanibel Investments, who I know they've partnered with already on their 500 Sanibel's accelerator. Some background on 500 Global for those who are unaware in terms of their pedigree in the region. They've been here a long time now. I think their first investment was back in 2012. They made 30 investments before they launched their MENA dedicated fund, Falcons One, back in 2017, which is spearheaded by a friend of the show, Hassan from Plus VC now. Look, they've invested in over 270 companies since then: Iowa, Flowered, Foodix, Lean, Trucker. So look, it's perhaps no coincidence that a lot of these startups are not far away from, I would imagine, liquidity events. I think there's a number there that have been earmarked to debut in Saudi at some point over the course of the next 2 years. So they certainly have the track record part down. So it's a really exciting development. Look, Series B funding's at a 5-year low. It only accounted for 2% of deals last year. So much needed and most welcomed.
Thank you, Jamie. So 500 Global, they built their name on backing startups super early, seed and pre-seed. But now they're writing $10 million checks as an accelerator going into that stage. That's different. Is this a natural evolution, or does it signal a lack of strong Series A and B investors in MENA? What do you think? Let's start with you, Ahmed, because you're in Saudi.
First of all, I think it's a strategic move from 500 Global, to be honest. I think given their experience in the region and the time spent, a lot of companies in their portfolios have matured now, and they're at a Series A, Series B. Given confidence in the ecosystem of the region, they're doubling down on their thesis on those companies who have graduated from seed plus, pre-Series A, and moving on to Series A and Series B. Just an interesting fact. Yesterday, I was in Entrepreneurs of Action hosted by MISC. And an entrepreneur was speaking that 85% of funding in the kingdom was towards pre-seed and seed stage, which just doubles down on the 500 Global being a smart mover and focusing on Series A and B.
Sorry, Ahmed, I have a question on that. 85% of the volume of deals or the dollar value of deals?
Dollar value of deals.
Okay, that's actually really good to know.
Yeah, so Hadi, what do you think about this move by 500 startups?
think there's a few elements here. One is there's a big gap in the market in that stage of funding, absolutely. And there are top quality startups, not a lot, but a handful of them that are reaching that stage, and everyone is wanting in on those types of deals. So 500 are smart to kind of build a fund that does exactly that. But also the second element and the most important one is the access to capital. And 500 definitely saw an opportunity that will drive the ecosystem in the kingdom and in the region. And they were very well backed by top investors who were happy to fund this idea of moving to a more mature ecosystem or a more mature type of fund. So it's a combination of both. And I think the access to capital is aligning with the vision of the kingdom and the region. And it makes sense from their end. But it'll be interesting to see how it will be deployed because as you mentioned, I mean, 500 has always built the business here and globally on pre-seed. So we haven't seen them invest big tickets and invest in later stage, even globally. So it'll be interesting to see how that evolves.
Yeah, and I wonder if they will exclusively invest in their portfolio companies, the graduates of the accelerators, or
Yeah,
Jamie?
they actually did cite, Ahmed, that it won't be
Oh,
exclusive to just their
won't be.
portfolio. Yeah,
Okay.
so exactly. Yeah.
Ali, what do you think?
Yeah, I think it makes sense from the point of view of the LPs as well. We have to think about them. They are looking at the Saudi market and the MENA region in general. They see a bottleneck, as Ahmed was mentioning the numbers. You know, it's obvious that growth stage is a problem in the region. I know that we've suffered from it a lot. We have to help our founders shop GPs from outside the region and who understand this stage, etc. So it makes perfect sense from the sovereign wealth kind of fund delivering on the strategy for Saudi to invest in this. And 500 is a logical partner. I don't think the fact that they are in the early stages that much of an issue because it's a separate fund with a growth-oriented investor at the helm. So, they are going to be just focused on that. I would imagine that they will double down and really help their seed stage investments, but also be able to grab selectively the best of the best out of the other founders in the region before the foreign kind of the totally American or European funds come in and take them. So all good, I think.
So let me stay with you, Ali. As Jamie mentioned, it's Series B funding in MENA has been on a 5-year low with just 2% of all deals. So what's the problem? Why do we have lack of growth stage funding in MENA? Is it the startups, they're not growing fast enough, or is it capital or LPs are not incentivized enough to invest in growth stage funds?
Yeah, I mean, I think actually it's kind of the natural progression of an ecosystem. We are also creating a growth fund as part of Endure Capital, by the way, in Saudi. And that's because we also saw this problem of graduating our startups. They have great numbers. They would be eligible for funding easily if they were in another region, but simply there's no one there's not enough money in the region to invest at this stage. So it's just the natural, and this is what every ecosystem that started before us has gone through. First, people come in with angel investments and seed investments, and then as the need grows, the market starts to fulfill that need. First, it's just people coming from abroad, kind of imported supply, and then the market, of course, sees the opportunity and starts to fill it. So I think it's very natural, and I hope it accelerates over the next period because what I'd love to see is people not just, for example, getting a Series A or Series B to expand from UAE to Saudi or from Saudi to Egypt or whatever, but rather to start to think globally and to start to have an impact globally. And to have that level of ambition, you have to have that level of capital.
Ahmed, what do you think? What is the issue? Why don't we have enough growth stage funds?
I actually agree with Ali 100% what he said. It's a natural growth for a nascent ecosystem for the past couple of years. We've seen pre-seed and seed growing with a couple of actually Series A and B with foreign capital being backed up, which is something amazing. But I think the MENA is in the perfect time for an amazing Series A and Series B companies to be funded by the region and from the region, by leading GPs.
Hadi.
I think there's one fundamental pain point slash problem that we've seen here is I think the lack of talent, in my opinion. Talent is staying in San Francisco, in New York, in London, and you see the level of competition and the level of talent operating in these areas, and it's incredible. We haven't had that. It's growing. We're getting really good talent from outside to build here, whether they're from here or not. People are setting up shop here and trying to build business from here, and that's driven by many things. One is the infrastructure, to a certain extent, to the availability of funding, and then also the regulatory landscape for many businesses and many industries, which is trying to be ahead of the curve. So I think talent has been one of the biggest issues, and as we solve for everything else, the talent will flow. And I think the types of businesses and the quality of the businesses and the quality of the teams that we build will flow. And if we look at the benchmark, which is Silicon Valley, and the way they've attracted these talents and the way they've built these businesses early on is by having a lot of funding, having a lot of perks, building these offices, building these environments and cultures, and fostering this innovation and collaboration and everything that will lead to the growth of the business. We haven't done enough of that here, and it's important. It's important for one or two people to have the idea and to drive that, but if you want to grow that to a certain extent and you want to grow beyond a certain level, then you need much more than that. So I think talent has been a key issue, and as we grow and mature as an ecosystem, we'll be solving for that.
Well, Hadi, let me push back a little bit. There is a competition now between UAE, Qatar, and Saudi to bring those talents, to spend more money on perks and offers, especially in Abu Dhabi. We know ADGM, they're supporting startups to just come Hub 71, and similar initiatives, of course, in Saudi and Qatar. And it seems that Saudi, if Saudi keeps continuing to be to dominate the MENA VC funding, will we start seeing all the companies and VC firms relocating to Saudi? I know Saudi is demanding from some companies to move their headquarters to Saudi, and some others are just moving because it's the biggest market. What does that mean for the UAE, Qatar, and even other countries, Jordan, Egypt?
I don't think any place will replace another. I think all of them collectively will keep on growing. When I was in the corporate world 3-4 years ago, there was a mandate that these companies have to move their headquarters and move their employees to Riyadh and to start becoming more Saudi-based. And a lot of that has happened. A lot of it hasn't happened. The branches are still here. The employees are still here. You did grow your presence there, and it's great. But I don't think it will be a complete replacement. You'll just move from one place to another. I think as Saudi spends more money, the UAE will also have its own initiatives. And you mentioned Hub 71, Qatar will have its own initiatives. And I think it's great. This is healthy competition between the countries. And also, if you look outside the region, this has happened before, and there was healthy competition between the different cities and the different hubs. So I don't think one will replace the other. I think it will all drive each other forward in a healthy way. But yes, I do think there will be more of an influx towards where the capital is, the perks are, and the benefits are.
Ahmed, why do you want everyone to go to Saudi?
Well, I'm going to be biased here, and I'll give you from my lens at least. I'm an ecosystem builder here in Saudi, and the number of LinkedIn inbound that I receive of people wanting to move to Saudi from abroad is astonishing, to be honest. I created a document giving out information about the top accelerator programs, soft landing companies, Ministry of Investments initiatives, Jeddah, NTDP, all of that. And I would send it to those people whom inbound. But I believe, as Hadi said, that each ecosystem is unique by itself. Every ecosystem has something to offer. Being a Saudi and a bias, I would say Saudi and Riyadh are inshallah, is the number one and going to still remain number one in my biased opinion as a Saudi. But being real, every ecosystem has something unique.
You mentioned that you are working on a stealth mode fund, Deeptech fund in Saudi. Are you going to invest only in Saudi companies, or you're based in Saudi, but you're investing in regional or global companies? And why Deeptech?
Sure. So we believe from a fund perspective that the Saudi ecosystem is rapidly developing. Given the past couple of weeks, we've seen a lot of initiatives and demo days focused on deep tech, cultivating researchers, trying to teach them how to monetize on their IPs, and etc. So Given that and the government initiatives, we believe that we have positioned ourselves in the right time to back those founders by our expertise to create an amazing deep tech ecosystem in Saudi, for Saudi, and with Saudi entrepreneurs.
Well, good news for you, because you're focusing on seed. We have Ali here from Endure Capital. They're working on a growth fund, a growth deep tech fund in Saudi. So Ali, why Saudi? Why deep tech?
No, the growth fund isn't deep tech. The seed fund that
okay.
we're building is
Okay.
in deep tech. The growth fund is general. And why Saudi? Because I think they are thinking strategically about this. It's for the same reasons that 500 doing it. It's the biggest market in the region by far. So there is the need for our startups wherever they've started out to expand there, definitely. And there is a strategic will, so to speak, to have startups grow significantly in the region. On the issue of Saudi versus Abu Dhabi versus Dubai versus Qatar, I think from our perspective as a fund, it's just competition is good. I think that healthy competition is a very normal thing. Each of these ecosystems will thrive because of the competition, not despite of it, because it will drive each to focus on specific things and to really differentiate and to add value in these things. And at the end of the day, the GCC is pretty accessible to each other in the sense that there are treaties, etc., between the nations. And so it will be just a case of starting where it makes the most sense and then expanding from there. And then really, it doesn't make a difference what your nationality is.
Makes sense. Makes sense. The world is becoming a global village, so it doesn't really matter where you are. Jamie, move us to the next story. I hear you have something about biotech today.
I do, yeah. Not something that the region is traditionally overly strong in from a startup perspective. And just touching on there, obviously, a collaboration between ecosystems with Global Ventures, who led the Series A, or pre-Series A even back in December, and it's now been extended by Golden Gate Ventures, obviously Doha-based. So we're all friends here, Ahmed. Don't be trying to stoke these sort of divisions between ecosystems where we can all get along just fine. But yeah, Biosapien, so this is actually Golden Gate Ventures, the first announced deployment in the region as well, which is exciting. We also had Michael back on the show, I think it was in November. In terms of the startup itself, it's founded back in 2018, so it's actually been around a while, as you'd expect, sort of, I suppose, from a biotech company as well. It's much longer road to market than a traditional startup. Founded by Katja Ali, essentially developed a 3D printed drug delivery platform. Essentially, it's an alternative way to deliver chemo. So you undergo sort of a minimally sort of invasive procedure to put the patch on top of the tumor, and then the patch releases chemotherapy directly onto the tumor with sort of minimal side effects. That's the idea. So instead of generally, if you're undergoing cancer treatment, you're hooked up in a hospital and you're immobile, with this product, you could potentially be going about your regular day-to-day, which is obviously fantastic. In terms of the initial focus, it's going to be on colorectal cancer. They joined Hub 71 back in 2023, originally US based, and they relocated to Abu Dhabi. Apparently, clinical trials are a lot easier and faster here than they are in the US. So that's the rationale behind that particular move. And also, believe it or not, it's just not that attractive from a sort of grant perspective either, it seems, in the US, where sort of gene therapy or computational biology is getting the lion's share of funding. It was interesting that the founder, Katja, she did an interview maybe 2 years back. I want to leave you with this one particular quote, which I thought was pretty insightful and striking. Biotech is the future. You can have fintech and all these other systems, but if you don't have healthy people to use them, they're meaningless.
I like that. I like that. And you know what? I don't know if it's good or bad that the clinical trials are easier in the MENA region than in the US. I'm not sure, but a good thing that it is needed. They're solving a real problem. And if they have the solution, that would be revolutionary. Before we get into questions about the investors, of all of you, do you consider biotech as part of deep tech?
We definitely do. We've already made 3 biotech investments in the first fund. One of them is doing very well. It's a Canadian company. And another is a British company that's also doing well. And the third has closed, actually. But we do believe it is. And we see a merger happening, actually, between biotech and AI. And, this is just happening. And I mean, even in this case, Biosapien, there's 3D printing aspect to it. So there is this merging that's happening. It's accelerating things, and it's also complicating things in a way, because we have this. There are like two gears that are going at totally different speeds from our experience in this area. The first is going very fast, which is the acceleration of development, etc., through machine learning and foundational models that are focused on discovering new drugs and new therapies and new delivery systems and just new discoveries actually in how the body actually works. So that's happening very fast, and every day we're hearing new things. At the same time, there's a slow gear, which is the time to market for a biotech product. So as you mentioned Biosapien in this case, they started in 2018. They're just starting the clinical trials in 2025, and this is normal, and it's important, of course, for the safety and the health of people. But this is where these startups fail. One gear can really clog up the other. And while you're working on the slower gear, a company in China might come up with something because you've been working for 3 years to take this to clinical trial that's totally new and leapfrog what you did. And so there is this kind of tension in this business, but it is beautiful in the sense that it's very impactful. If and hopefully when Biosapien delivers this, it will be. And I have a friend who's going through chemo these days, so it will be a huge difference in people's lives, and this is really beautiful to see as a venture capitalist.
Well, China proved that they're faster even in software, but we'll get into that later on.
I kind of dropped that reference, for later. It's not only machine learning, right? It's not only AI.
Ali crafted what he said amazingly. He stole words from my mouth. I can't add more, but indeed, having a purpose in investing is something amazing. If you can not only get returns to your LPs, it's more about the impact you create. And yes, we do consider biotech as a part of Deeptech, given all areas and subsectors of that.
Have you seen some deal flow in biotech in Saudi so far, or you're working on getting that deal flow?
We're viewing the market currently. We're looking at deal flow in Saudi, and I believe that the ecosystem here is cultivating that. And in the upcoming 1 to 3 years, we're going to see a lot of Saudi companies in that space.
Yeah, I was just going to say on the issue of clinical trials, I'm actually, I was, for example, talking to last week an Indian biotech company, and they said that their advantage versus their American customers was that clinical trials in India are much easier, and so they can go to market much faster and go that. So this is kind of a theme that's happening, and as you said, it's kind of a mixed bag in terms of whether it's good or bad.
So actually, before we became a sports and entertainment focused platform, we were more of an angel investment focused platform, and one of the deals that we did was a Y Combinator-backed London-based startup that does not the same, but something similar, and at the intersection of AI and medtech, basically. So I looked at the space a bit. I'm definitely nowhere near being an expert in biotech, but from the way I would see it, this is a very, very, I know the startups in general are high risk, high return. Biotech is even higher in both cases, higher risk, higher return. In the sense that, first of all, it's an incredibly tricky space. Competition, you're competing with trillion-dollar companies in the space to produce technologies like that. And then also it takes a lot of time, which we've seen so far. And then you need adoption and you need it to work. So you have to spend a lot of money. You raise Series A, maybe even Series B before you sell any product or make any dollar out of it. But if you actually start selling and it starts getting adopted, then the returns are immense. And you can go easily from a 20, 30, $40 million company to a $500 million company. But it's just higher risk, higher return than even traditional venture capital. So the whole space is extremely tricky, but I mean, great validation, Global Ventures, Golden Gate, So it seems like the guys are on the right track.
As you mentioned, it's kind of a moonshot, right? Like high risk, high return. Biosapien is kind of pushing the boundaries of drug delivery with 3D printing tech. But we know that biotech is really hard. As you all mentioned, clinical trials, regulations, market adoption, it takes time. Do you think investors in MENA are patient enough for these types of moonshot bets? Or as Jamie mentioned, they prefer fintech, but maybe will not have healthy people to use those fintechs?
So I believe that biotech has a specific return profile, a specific investor that invests in long-term, rarely successful startups. So it differs from, let's say, a generalist fund, for example, and the LP pool is totally different. The goals and the return profile, the time horizon, it needs a different pool of people that do understand what is biotech and how long will it take and what is the effect and impact, not only on a dollars amount, but also on a social responsibility or towards the community itself.
So yeah, just a second, what you said, and generally speaking, we haven't seen a lot of patience, I would say, in the ecosystem. But as we mature, this will be kind of tailored to what type of industry you're investing in, what type of business you're investing in, who you're backing, and the relationship between the investor and the founder and the business itself. So hopefully, in that case, we'll see a bit more patience. And it's not just that biotech faces competition from the trillion-dollar companies. There's also a lot of competition on the startup space globally. If we look at types of companies that are coming up in that space, there is a lot of overlap between what Biosapien is doing and what other companies are doing in other parts of the world. But hopefully, given that they're a MENA-based company now, MENA-backed company, then hopefully they get back until the end.
Usually, I mean, in the US, you find people who are focused on investing in biotech, and because this is their area and they have a portfolio. And one of the ways to build patience, in our view, is kind of different, which is to have a mixed portfolio, which includes biotech. And this gives you the kind of the stamina to back the biotech companies until the end, because it's part of a portfolio. You can kind of afford to take that risk because it's part of a diversified group of investments. Of course, the thing that hasn't been tested in regional biotech companies is the go-to-market, because at the end of the day, the real market in biotech is the US. And so you have to find a way to pass clinical trials there quickly and to go to market there and to find the partners and to do all that. For example, our company from Fund One, they partnered with Novo Nordisk, which is the biotech, the pharma giant, to take things to market. And we saw that also with the mRNA vaccines, for example, the partnership between Pfizer and the German company, which I don't recall the name of now, to take the COVID vaccine to market, etc. So hopefully we will have these partnerships and this type of infrastructure to be able to take things to market, but that's a risk for someone being based in the region in biotech.
In biotech, it's a huge market and you have to partner with someone else. You work on a small, tiny problem, but then you need everyone else in that big ecosystem to help you go to market. But let me talk about something else about Biosapien. They extended their pre-Series A round instead of moving directly to Series A. Is this a smart move to build traction, or does it signal that raising the full size A is in this space is still tough? This is not common to extend your pre-Series A. Usually just to go to Series A. What do you think happened there?
I think it's how we name the different stages, whether it's called Series A or called pre-Series A or called Seed Plus or Bridge Round or whatever we end up calling it. Especially in biotech, it's different because there is a certain definition, generally speaking, for startups. How do you get to Series A? You hit $1 million in ARR, and then you start calling it Series A. In biotech, it's even trickier because you don't get to that level of revenues. It's a bit different. But generally speaking, I think if what happened, they raised the 5.5 million as a pre-Series A, and then they topped it up with that extra investment from Golden Gate Ventures. So it's smart because they recently closed that 5.5 million, and they decided that if there's access to more capital, there's a strategic investor that we see like Golden Gate that they can bring on board. And it makes sense to just keep it as part of the same round. But the distinction between pre-Series A, Series A, and Seed Plus is generally not that clear, and more so for biotech companies. I think this is, for my opinion, it's more of terminologies than actual facts.
Yeah. Ahmed, what do you think?
Just to add on what Hadi said is that indeed, I think it's a smart move from Biosapien team to extend their Series A, their pre-Series A round for a couple of reasons. To be honest, the metrics and KPIs are totally different from sector to sector, and I believe that biotech would definitely need a specific KPI or metrics for them to qualify for a Series A. Given the extension they just got in funding, that will definitely help them achieve more metrics that will have a stable, much larger, with clear goals in their Series A.
Jamie, do you remember when did Golden Gate Ventures announce first that they are opening an office in the region?
It could have been maybe during the summer. I think we covered it. So it was maybe 6 months ago. I think that their first close just before Christmas. I think based in terms of just to touch on as well, the Series A extension, I think this was very much to facilitate Golden Gate Ventures coming into the fold. I think there wasn't the intention initially. I know Katja posted about this on LinkedIn, so it's not that I have some sort of insider track. I think it was I think she met Michael at Hub 71, and look, it seems like there was some alignment there. So they just really wanted to bring them into the fold on that. But yeah, it was sometime during the summer, 100 million early stage fund.
I was trying to figure out how much time did it take them to make their first investment. During those 6 months, they were raising the fund as well as building the pipeline. And then eventually now, ending of January, they have something solid and they announce an investment in the first deal. Ali, what do you think about this? You invest globally as well. How much time does a fund need to build their pipeline? Not closing the fund, forget about that, but building the pipeline and start investing if they're coming to a new region.
I think this is a reasonable timeline, actually. It makes sense for them to have worked on building the pipeline while they were fundraising. It actually makes perfect sense for them to have something ready to invest in just a month after closing.
Okay. Ahmad, Hadi, any comments on this?
Nothing in particular. I do think the timelines are very reasonable. It takes time to secure the commitments, to get that fund up and running, to get the setup in place. And I think 6 to 9 months is actually a very reasonable timeline.
When a GP is in fundraising mode, definitely he would be looking at a clear pipeline on what he's going to invest in, what is not. And I'm sure that LPs, while he was fundraising, asked him about his pipeline, what is he looking at currently? And given that investment, I believe that there was a clear thesis from a fund perspective and a return profile that made him do this first investment in biotech in the region.
Yeah, I'm only asking because we hear about those big names or global VCs who are looking at the region and might be opening offices in the region just to manage the expectations. When can they actually start investing in the region in any stage? So with that, let's move to the next story, Proptech. I know last week we talked a lot about Proptech, but we still have some news this week.
Yeah, let's get back on familiar footing. That was all very abstract. Let's give our brains a slight break for a moment. Let's go back to short-term rental marketplaces and property management. Much more comfortable footing. Silk House, UAE based, they've secured a 7-figure growth round led by Nua Capital and RSA Capital, participation from some other investors there as well. So across this round, the new funding is going to accelerate Silk House's expansion into Saudi. The platform is now open for bookings there already, I believe. In terms of the sort of guests they cater to, it's both business and leisure travelers. I think initially the thesis was very much catering to the corporate side of the equation, and based on the prices that I've seen when I was trying to book a rental accommodation in Dubai last week, it still seems like they're catering more so to the corporate class than the bracket that I'm in at present. But in any case, in terms of some context, short-term rental marketplace in KSA and UAE valued over $2.5 billion, growing about 46% per year as well. And I guess in terms of what Silk House offer for travelers, obviously flexibility, it's anywhere between a day, a month, quarter or an entire year for landlords. Obviously, it maximizes return on investment and handles the property management side of the equation as well. And they claim that it can increase returns 20 to 40% versus traditional long-term leases. I think they currently operate a portfolio of properties valued at over like $200 million or something to that effect. So look, the expansion into Saudi is an interesting one.
I have only one question on this. Well, they're doubling down in Saudi. They're expanding to Saudi with this fresh capital. And we've seen a surge in Proptech in Saudi. It seems that it's a hot market, just like fintech in there. Do you think there is still room for more players in the Saudi market, or are we heading towards people just building things and then consolidating them together? Let's start with you, Ahmed, in Saudi.
Sure. So there are two answers, to be honest. The short-term answer and the long-term answer. For the short-term answer, let's stop a little bit and look back. We've seen Darent close their round with having Morgan Stanley as an investor in their cap table, a global investment bank doing this move. I believe that the market in Saudi is still in need of players, given that Silk House just moved from or opened their operations in Saudi. For the long term, I believe down the road, we will definitely see consolidation. So we have in Saudi, just to give a few names, we have the global player Airbnb, we have Gathering, we have Darren. All of those players are serving the Saudi market today from a tech perspective as startups. Adding Silk House, there is more room to play there and eventually consolidate down the line.
Ahmed is an expert on the Saudi market. He definitely knows more than us on the real estate situation there. I think I personally like this concept in Dubai. There's Airbnb, obviously, but then there's also Blue Ground, and I don't think Blue Ground has expanded to Saudi yet. Blue Ground is the global platform, it's a global player. There is always room for more to a certain extent. It's a competitive market, yes, but you can always compete on services, and you can always go for either more premium offering, or you can compete on price and target a different clientele. And the B2B angle is particularly interesting, especially we all know that there's flights every day in and out for consultants, bankers, executives going in and out of Saudi and Dubai, and companies renting and spending a lot of money on hotels and the deals with the Marriott hotels and with other hotel chains. So there's definitely a gap on the B2B angle, and I like this part of the business. But yes, it's definitely competitive.
Amazing. Ali?
Yeah, I found it interesting that they seem to be approaching the business model a little differently as compared, for example, to Airbnb. So they seem to be managing the properties themselves. So they're taking on more liabilities, so to speak. It's a more capital intensive situation than Airbnb. And we've seen, like, with Airbnb worldwide, for example, they have propped up in their ecosystem property management companies that say, okay, we'll take your real estate and we'll offer it on Airbnb. So they're actually doing that themselves. That will result in a different type of income statement and a different type of balance sheet. And it's going, for me, to be interesting to see how it plays out, which is the better, more capital efficient way to do things. I'm not familiar with Gathering, so I don't know what their model is, but what I'm saying is they've decided on a different approach for this different market. And I'm wondering if this will be the more effective approach or whether they will come to regret it.
It's amazing how one company can create a new segment in a whole industry. Like Airbnb created that new segment that was not there before, and they challenged all the hotel markets. And now they have created this new ecosystem where there are companies that are managing properties, and then now there are companies that are trying to challenge Airbnb itself by changing or tweaking the business model. But I don't see a true big innovation there, but they're still challenging the model.
It's not a huge innovation, but it can actually be a significant differentiation, because if you run the property, you also control the experience much better. And so you can offer something that's very consistent and perhaps better quality. And so there is a kind of market penetration angle there as well that might be, and differentiation that might turn out to be interesting. I'd actually love to chat with the founders about it to understand how they're thinking about it.
Yeah, same here. Okay, so Jamie, move us to the last story. It's a big one. DeepSeek versus OpenAI. What's happening
Yeah.
there?
I won't spend too much time providing context because I'd imagine everyone watching is already pretty familiar with the situation at present. But essentially, it's a sort of hallmark story of the plucky underdog. The first time I think a spin-off of a hedge fund has ever been positioned quite like that. But in any case, zero geopolitical implications to the story either. It's all very smooth sailing. Yeah, look, everyone knows, but DeepSeek R1 trained or developed the model for less than $6 million. Apparently, well, they have, but look, I mean, there's other things we need to take into the equation here as well in terms of. I know they mightn't have had the latest GPU chips, but still, I think whatever cluster they have is still estimated to be something like $1 billion in terms of the cost associated. So they're not quite that plucky, they're not that quite underdog. But in any case, they obviously have drastically reduced the price, and they've sent Nvidia's share price plummeting, 600 billion in market cap, wiped off in a single day, which is just astonishing and difficult to wrap your head around. But look, all in all, exciting times. You'd have to say as well, obviously open source as well. And one would have to think that it's going to drastically reduce the costs for startups to be able to build upon these models and iterate, which can only be a good thing, you would like to think.
With tech, we always get these moments where a smaller, less funded player suddenly challenges or even leapfrogs the big incumbents. But with AI, it feels like the process is happening way faster than we've ever seen before, right? And I'll be honest, I thought I was on that camp, that thinking, who can really compete with OpenAI, Gemini, or Claude? It's like, don't bet, as Sam Altman said, don't bet on AI models, just work on the agents. But then, boom, there is DeepSeek. They suddenly changed the whole game, and everyone is talking about this now, even in Silicon Valley. And you know how this affected the prices of tech companies. Are we underestimating how quickly challengers can disrupt AI, or is just the nature of a field that's moving at lightning speeds?
So at the beginning, it's the first time I see a hedge fund releasing something for free for people, to be honest, rather than sucking their blood. So that's a positive thing. I believe there is another element for them doing that. We'll have to wait and see what's the play behind the hedge fund doing that. But overall, I would say that this democratizes the data for people. I think a lot of startups, ecosystem players will benefit from that. The more the competition, the more people are going to be able to use those for less prices, cheaper, and be able to kind of expand that narrow focus on that.
Yeah, I have several comments here. So the first is related to the fact that they did this. And I think, interestingly, I've been hearing about also American teams of 3 to 5 engineers that are working on leapfrogging the AI models and trying to raise money based on incredible work they're doing as well. So, I mean, let me put it this way. They were brute forcing growth, right? I mean, they were improving just by brute force. And it was inevitable that somebody would actually give some engineering aspect to things and start to think about different architecture and different approaches that would make things more efficient. And it happened to be that the first people to market on a big scale was DeepSeek, but I think there are already also American teams that are working to do this type of improvement, and we'll be surprised to see some of them during, I think, the next year. On the long term, surprisingly, supposedly public markets are supposed to be like long-term investment and think about all that, but they're very actually short-term on the sometimes with and very jittery. But
they
things
were very
will
quick
balance
to
out
react.
again.
Yeah, it's weird.
Yeah, I mean, it's like they overreacted in a way before they even calculated the effect. They were almost like they were looking for an excuse to sell, and they all felt that it was overpriced, but they were just waiting to understand why they had that feeling. And when they when somebody gave them a reason, they just sold immediately. But long term, what happens with technology is that as it becomes more available, it gets used more and more. That's the weird thing about technology. And so this does not mean that there will be less need for GPUs, but maybe different types of GPUs, maybe things like, I think it was called Digits, that Jensen announced at CES, the small GPU, for running models like DeepSeek. I think the really cool thing about DeepSeek is not the engineering feats, because mixture of experts and all these things, people were working on them already, but the approach of open sourcing it, and the openness and sharing with people exactly what they did, and the availability for engineers even in our region, for example, to take this know-how and maybe take it to the next level, and putting it out there for all of us in the region, that who's going to put up maybe just $10 million for a super team of engineers from the region to do something special and leapfrog DeepSeek because I think we have some very innovative minds, and because the more constraints you have, the more likely you are to find weird solutions, as we've seen in this case, that the others might not think of.
Yeah, I really like this, Ali. I mean, it doesn't cost hundreds of millions or billions of dollars to build something like that, and China has, or DeepSeek has proven that. And before that, even when India launched their satellite, and it was like a fraction of the cost that the US usually spends on these satellites. So there are other ways to, or hacks maybe, I don't know, to create big tech, not necessarily follow the same Silicon Valley model, where they pour tons of money on something until it happens. And I hope we can see something like this, maybe $10-15 million investment round into one company to create our own AI model in the future. Hadi, what do you think?
If we split this into two parts, one, if we talk about the fundamentals and what happened on the public markets, and that's obviously driven by NVIDIA being down 15 to 20%. Was that a correction that's much needed? Was the whole stock inflated? I mean, I think in my opinion, the whole AI bubble, and it's not a bubble just like 20 years ago, but it is to a certain extent a bubble. A lot of money have went into AI in the good and the bad ways. But I think the stock, the reaction of the market to NVIDIA stock was probably a market correction. If you look at the fundamentals and the multiples that the company has been trading at, it's insane. And 15-20% is not that drastic. It's not like it's 50% down. But NVIDIA just skyrocketed very, very quickly, and it was driven by that AI boom. And the first part of these things is this a correction? Is this overrated? Have we just overinflated a bubble into what this is? And then the second point is, did we make it more interesting because it's a Chinese product versus an American product? And did that just generate more buzz and more hype around it? Is there an actual use case for DeepSeek and that it's much better than OpenAI or much better than what's out there, which is, if you put these products next to each other? So I think it'll be interesting to see how this plays out, but I would love to see if DeepSeek was a Canadian or a French or a British product, what would have been the market reaction versus it being a Chinese product. And then we focused on some details that cost $6 million to make, and that's all it is. And now we might start funding companies, giving them $6 and $10 and $15 million because we think we can compete with what OpenAI is. It's just going to be fun to see how this evolves over the next few months.
These are very interesting points. If it's not a Chinese company, and we know the heat now between the US and China, and we have the big tech supporting the new administration, and now this new Chinese company that comes from nowhere and competes with Silicon Valley and all these tech giants. Yeah, very interesting point. And I read in the news somewhere that the $6 million number is not really the whole funding of that company. It's just the training of the latest model. It's not just everything. So just to be realistic here.
This is what the media is feeding us today, that it costs $6 million, and all we see is this amount. It's definitely not the case, and it definitely did not cost only $6 million to come up with a solution that's now the number one downloaded app and widely recognized as the competitor of a $200-300 billion company. So it's not the full story.
Yeah, but even if it's not, I mean, if it's 10, 15, 20, 25 million, it's way less than what OpenAI spent to create their own model and Claude and Gemini. And
we did not tap onto the allegations that Microsoft and
Yeah.
OpenAI are pushing now that DeepSeek has used their models and has used their data, which I would find very funny personally. And I think everyone anyway is using an open source, which is everything that OpenAI has is available for everyone to build on top. And all the tools that we've used and all the companies that we've funded are either built on top of OpenAI, mostly, maybe not all, or Gemini or any of the other languages out there. So it's interesting that now we say they took our data, but this is public. This is something that everyone is taking to build on top of it. And that was the whole point behind it, right? OpenAI is a non-profit. It's driving AI innovation. It's driving human enhancement. And now that someone took it and built something on top of it, we're pissed off about it. So again, it's such an interesting story.
Yeah, it isn't entirely replete with irony. I mean, they did train GPT model by sucking down the entirety of the written web without any sort of consent whatsoever. So it's hard to feel an enormous amount of sympathy for them in reality.
Exactly.
Yeah, I mean, there have been startups that have a lot of data on their websites where their websites crashed. And when they investigated, it turned out that the OpenAI spider was just grabbing all the data on their website without their permission. And now they're complaining that somebody is using their model to train, it's beautifully ironic. And especially, and I think a lot of people were like talking about Sam's arrogance. I don't know if any of you saw that video where he was in India and somebody was asking him if a team there could build something. And he was like, it's impossible, you'll never do it, etc. But really, I think Sam is a smart guy, and he knew it was possible, but he's just playing game theory. He's just trying to convince everyone, as many people as possible, that they can't catch up, and that it's all about a matter of scale, and that they're going to have AGI next year anyway, so it's too late for you to even start. Just to get as many people as possible not to put capital and not to be interested in the space. I guess doubly interesting and funny that this hedge fund did this, to be honest.
I have a side question just to end Ali's conversation. Do you think that the hedge fund, before releasing DeepSeek, shorted NVIDIA stock?
I love that question.
Yeah, definitely.
Maybe. Yeah, maybe they did.
That's the definition of insider trading. So I highly doubt that.
Well, with that, thank you so much, Ahmed, Ali, and Hadi,
Thank
and as
you.
always, Jamie, for this conversation. It was fun.
Thank
And
you.
we hope we see you again soon.